Hello, and welcome to the September Commonwealth Market Update. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. There's no doubt about what the story is this month. The shocking declines, not only in U.S. markets, but around the world. We saw declines of between 6 and 7% in U.S. markets, and actually even worse internationally. More than 7% in the developed markets and more than 9% in emerging markets. The questions we have to ask ourselves are, first of all, what caused this? And second of all, what does this mean for the future? Let's start with what caused it. The first thing you'll hear about, and it's very true, is that events in China caused this. But implicitly, things in China don't have a direct connection to here in the U.S. or the rest of the world. The effect was that events in China reduced confidence around the world. Confidence translates directly into stock market levels. For a given stream of earnings, the more confident investors are, the more they're willing to pay. And that's exactly what we saw. We saw valuations come down in response to the increased uncertainty. What does this mean for the future? Well, two things. First of all, we have to look at the levels of confidence. Second of all, we have to look at the fundamentals. In terms of the levels of confidence, there's been some important technical damage done, not only to U.S. markets, but to international markets as well. We've seen important support levels violated. The S&P, for example, dropped below 2,000, which is typically a big round number is a good support number. We may have some trouble getting back over that. Also, the situation in China has not resolved, so there's going to be continuing events that continue to erode confidence. We're probably going to see continued turbulence. We might well see more of a pullback. In many respects, this is normal and even healthy, but there's no denying it's scary. But the ultimate impact is going to depend on the fundamentals. And here the news is a lot better. U.S. economic fundamentals remain strong. We see job growth increasing. We see consumer spending increasing. We see business spending ticking back up. We see the housing market normalizing. In other words, the U.S. economy is actually in pretty good shape. We're also relatively less exposed to the rest of the world than almost every other country out there, certainly every major country. So when you look at the U.S. here, certainly we're taking the damage from the loss in confidence. But as long as the fundamentals remain sound, there's no sign, at least at this point, that it's going to be a more than a short-term problem. So that's where we are today. We've had a significant pullback. It's been very scary, but in the larger term, it's actually pretty normal. And there are no indications as of yet that the damage will be long-lasting. Expect to see more turbulence, expect to see continued pullbacks perhaps, but remember that with strong fundamentals, we're actually in a good position for the medium to longer term. Thanks for watching, and I'll talk to you next month.